Thanks so much for jumping on today, Gokce. Much appreciated. This is our first ever inaugural TAZI Talk, where we're going to discuss some aspects of machine learning solutions out in the real marketplace of what's going on. And to start off, I am the US head of sales for TAZI AI systems. And I have been—
And I'm the data scientist at TAZI,
Yes.
a data scientist, of course.
And to start off, Gokce, how long have you been on the data science side? What's your experience and background?
Before TAZI, I worked in a bank, in a really widely known bank in Turkey for 2 years in a data science field as well. And at TAZI, I have been working for a couple of months. So I have a background in NPL solutions that we're going to talk today.
Outstanding. Thank you for sharing. That's very interesting. So this is very close to home for you. I'm curious, before we jump into it, what brought you to the TAZI team?
So TAZI is a continuous learning platform, auto-ML platform, and it is really exciting because everyone needs it as a business, the machine learning and data science. So being part of such an exciting technology brought me to TAZI, and the differentiators, being part of the team got me really into it. So that's why I'm here right now.
Awesome. Thanks for that introduction and overview. Much appreciated, Gokce. So to get into it, really, it's great to hear that you have such a strong background in this. So I'm curious, what is NPL?
NPL is a situation where a borrower is not able to pay their debts fully to a financial institution. And usually these are banks. We can call these institutions banks, even after 90 days have passed after the deadline to pay the expenses. And we can give example products such as a general purpose loan or credit cards or overdrafts, for example. And these are one of the most important analytical models for risk management.
Great. So that's really helpful to understand, especially for those of our viewers and listeners that are not familiar with the banking or financial sector. So I guess, first thing that would come to my mind is, why is it important for financial institutions to try and predict, non-performing loans, NPL?
That's a really good question, actually. There are a lot of applications to financial institutions about the products that I just mentioned, and correctly labeling these products going to be defaulted or to not going to be defaulted are really important to banks for decrease their default rates while they maintain their acceptance rates, or just increasing their acceptance rates at the same default rate. So basically maintaining their profitability and not going to being a zombie bank or just a zombie company. This is a really important thing to decide which applications to give loans or which applications to not. And
actually,
sorry.
If I could jump in real quick, that's a really interesting term that I just recently got familiar with. What is a zombie bank or a zombie loan?
I mean, zombification is, we can call this zombification, is happens when banks are not able to pay their expenses and not perform as usual because they are out of cash. So if the banks are not able to perform these kind of analytical solutions, they will not be able to catch up their expenses and make profits. So basically a zombie bank means that the bank is already defaulted or bankrupt, in short words.
Okay, thank you. That really helps explain it. And sorry, I didn't mean to cut you off. You were saying something else?
I was going to talk about regulators and supervisors. Why is it important to predict NPL was the question. And I was saying that regulators and supervisors are really, really keen on this topic because it is important to maintain banks or financial institutions regulations. So that was what I was going to add.
Okay, that's helpful. And it sounds like something that really could have helped in the last recession, because I know speaking about both businesses and mortgages, there was a really just prolific amount of loans and financing that was probably never should have been given out in the first place if all the data was collected and we had these kinds of solutions 10, 12 years ago. That brings me to the next point. So I know NPL is not like brand new, so why use something like, let's say, machine learning through a company like TAZI? Why do we use machine learning for this, and what are some of the benefits?
I mean, of course, what you said is really relevant to our topic. So as you said, NPRs are not new at all. This problem was all over, back centuries when, the first bank has opened. So statistical methods can also be used, not machine learning methods, or just basic analytical tools can be used. But here we use machine learning, and this is different from statistical learning because it actually learns from the past data. And here at TAZI, we have continuous learning and human in the loop. So these other terms might be really new for you, but it just means that the model learns continuously as you give feedback. So it is really more powerful when you compare it to classical statistical methods. And machine learning is something that right now every bank or every institution that you can see, because the performances are really much better than statistical methods. So that's why people are really moving on further to technological development, and machine learning is really one of the biggest steps, as I can say.
So when you talk about statistical methods, I'm not a data scientist, but I'm assuming you're talking about things like Python.
I mean, of course, you can do statistical methods on Python, but what I was talking about is just, for example, taking the average of, number of applications, and taking average of the, for example, we can say that, oh, let's not give people older than 60. Not give people older than 60 loans, and give them loans to the people younger than 60. For example, this is a statistical method. It's just a really basic thing that I'm explaining right now, to not get into details, but basically people were using these kinds of methods before machine learning, because deciding which customers to give loans or which customers not to give loans is not a really easy task to do, because there are a lot of features that you have to take into consideration. There isn't just age. There are a lot of features, for example, demographical data, or the amount of money that the customer has. So machine learning is capable of taking a lot of features, not just 10 or 12 features, because in statistical methods, you're really limited to a number of features, not more.
These statistical methods versus something like you mentioned, continuous learning, there must be a pretty drastic difference between, like the Excel type of technology and continuous learning.
Excel kinds of technologies are really old-fashioned technologies, because Excel really can't do machine learning. Excel just can do, basic statistical things. For example, taking standard deviation or average, or just using macros. I mean, these are also useful, but they are not enough for today's competitor medium, competitive medium, I'm sorry. And this is why people are really trying to catch each other. The companies are trying to catch each other. And that's why using Excel, I mean, of course you can use it, but the performance, as I said, or the things that you can do are really limited. So that's why using a machine learning and trying to, continuously learn with the data as the data flows, just continuously learning with the coming data, and maybe giving feedback to the machine by a human. For example, I can give a feedback to the machine by myself to make the machine learn better in TAZI. So I mean, this is a really different thing than just using Excels and trying to make predictions over some mathematical calculations.
Very interesting. That's a thorough and interesting explanation. So we talked NPL and also got into machine learning versus older statistical methods. What about TAZI? How can something like a TAZI NPL solution be compared to other similar machine learning solutions out there in the market?
This is a really good question. And the things that I will just add would be time, explainability of the model that we just built, and continuous learning and human in the loop. These are really important because, for example, let's start with explainability. People who are not in the machine learning field or just being new to the field might be struggling with explaining why this person, for example, in our solution NPL, why this person got the loan and why this person didn't got the loan. And in TAZI, we are really able to explain the differences and why we give the decision. So this is a really important thing because, of course, we have data, we have vast amounts of data, but why are we trying to do something about with it if we can't explain why are we doing it? So explaining it is the real key here. And also I want to mention continuous learning and human in the loop that TAZI has. As I said before, it just helps the machine to learn better. And for example, for the COVID-19 situation, people were just using lots of models to catch up with the changing data. But with the continuous learning solution, you don't have to change your models at all. You just have to give the data to the model and just stream the data continuously and online. And that's after that, your model is able to learn with the new data coming. And of course, time is a really big constraint in these kind of problems because the regulation and of course the in business we all of course always need time. So time is a really important thing. We can just deploy models in a really small amount of time. For example, in weeks, just 2 weeks. I mean, I can't just give a number, but this really helps decreasing the number of time spent on models. So yeah, these are the main things that I want to talk about.
Yeah, those are impressive. I'm thinking, with all the application that you just described, what types of banks, what size of banks, what types of teams are generally going to benefit from this type of technology the most, do you think?
Of course, data science teams are not available in every bank or every financial institution. If you have a data science team, you can see that you always need some background in the explanation of the models. And even if you have a data science team as a large bank, for example, large banks generally have data science teams, but they can also use this because the explanations of the features are really important. And these small things such as making statistical inferences about data points are generally time consuming for the data science teams. So as well as the large companies, also the small companies who don't have any data science teams can use this, can benefit from this because they for the banks, small banks or medium-sized banks who don't have data science teams can easily use this because it is really business interpretable. And also, as I said, large banks who have data science teams can also use this because to decrease the amount of work on their data science teams. So I can say that this is just usable for everyone.
It sounds like there's a lot of applicability across the market as well as a lot of opportunity. So I'm
Yeah, of
assuming that
course.
there's probably a whole lot of companies that don't have access to this right now that hopefully will in the near
Yeah, hopefully.
Yeah. So this is really helpful, Gokce. Appreciate you coming on and answering questions and kind of explaining the NPL type solutions. Is there any final questions or thoughts or ideas that you had?
I mean, thank you for having me. It was really fun and a nice talk between me and you. Thank you.
Absolutely. Thanks so much. Have a great rest of your day.
You too.
Bye.
Bye bye.